Okay, good afternoon, everybody. Uneducated Economist here. So in this video, we are going to be talking about the possibility of getting the stimulus checks from the Department of Government Efficiency. So basically, the idea is that the Trump administration, along with Elon Musk and his overseeing of what it is that can be found as far as efficiency, or the lack of efficiency, I guess I should say, within the government, ending those programs, firing those people, and then taking what is saved and just redistributing it back out there to the people in the form of like a stimulus check. And I think that's kind of like the gist of the idea behind it, because it is all hypothetical. None of it has taken place, none of it truly exists, and there is no real reason to internalize this as if it's going to be an economic event. Right now, it's strictly a hypothetical. Straight up, like nothing has happened. There is no checks going out. There's nobody who's getting any, and there's no reason to really internalize this. However, people are going to want to know about it, and it's going to be a very popular topic, at least until the idea either comes to fruition or just fades away. But either way, it's not real. So to understand what it is that is taking place when it comes to these stimulus checks, or the possibility of a stimulus check, it really just turns into whatever we want as far as our opinion or imaginations go. Now, I personally think about the idea of new money coming into the system, regardless of how it happens. If you got new money coming into the system through the payment of an employee that works for the government, even if it's efficient or not, it's still new money coming in. And if you take it from that person and say, hey, you're not doing your job right, and you're not efficient at it, and you're not doing good or whatever, get the hell out of here. And you take that money and you're like, oh, here, you can have it. And they go and just spend it into the economy. What ends up happening is those people who get the money first, right, go and spend it at face value. Now, whether or not it's some rich elitist or it's somebody who's at the bottom end of the line, the moment that they get that money and they go and spend that into the economy, what's going to end up happening is it's going to separate the rich from the poor. No matter how you do this, if you bring in new money into the system, no matter how you do it, it will have a separation. It will create the inequality. And again, we can take in the assumptions or the beliefs or the opinion that, hey, no, we can be very direct with this money, and we can, take it into this particular area and take it away from that particular area, and this will create the efficiencies that we're looking for. It's very delusional thinking, right? Because it doesn't go down like that. When new money comes into the system, it finds its way. And when it finds its way, if the people themselves who have access to that new money, unless they are very conscious, very disciplined with what they are doing with that money, it will separate themselves. They will separate the rich from the poor the moment that they go and inject that money into the economy through the purchasing of anything out there. And this is important to understand. The idea, like, even that you're going to take away from government programs that are inefficient and then this literally hand it over to somebody and say, here, just go spend it willy-nilly. That in itself, I mean, you think about it, like the government did not lose or become more efficient in anything inside of that. They had literally transferred the money to another spot. At least with the government program, you can, say you got something from it, right? Some sort of government service possibly. But if you take that away and say, hey, you're not, we don't appreciate what it is that you're doing. You're not efficient. You're not doing your job. You take it away and you're like, well, here, you can have it. And just give it to somebody else. There is no benefit from that. None. Right? Now, you might get the people who received it saying, oh, yeah, this is a great benefit. Hey, we're awesome, man. Thank you so much for the money. Right? But at the end of the day, what's going to end up happening is that the moment that they do something with that money, unless they are very disciplined and very conscious of what they are doing with it, what ends up happening is they spend that on generally a pleasurable experience, right? Whether it's food or convenience or some kind of enjoyment of whatever, that's what ends up happening with that money. Okay? Now, there are some people out there who are very, disciplined and smart. They'll pay off debt. They will invest that money. And the moment that they do that, again, they will separate themselves from everybody else, right? Or begin to, right? I shouldn't say they just do it. They'll begin to process the separating themselves from everybody else. So when I think about how it is that stimulus checks are going to come into the economy and the purpose behind them, it's not for the benefit of the people. It's not for the benefit of the rich. It's to maintain this system, to keep it going. See, the problem that most people are not seeing is that the government and the banking system and the way that it's all going down needs to have aggregate demand. Aggregate demand comes from production and savings. When people are industrious, when they go out there and they work hard and they produce something and they are able to get paid from that, right? That right there is the strong economy. It's not from being handed a check. Right? Being handed a check doesn't show a strong economy. Right? Production and savings does. Now, if you're in a state or a country or a position, an economy that is reliant on production and savings, then what you have is a very strong middle class from that. Right? Now, you think about it, here in the United States, when we had a strong middle class, we were producer savers. And that's the result, is the strong middle class. A lot of times people say, well, we need to bring a strong middle class back. How do you do that? Well, you have to be producer savers again. How do you become a producer saver when you have to compete against the entire globe of producers out there? There's somebody out there in this world who's going to produce what you are producing, and they're willing to sleep on the ground. But you want to produce and sleep in a house. How are you going to stay competitive? You can't. And this is the problem that we now face, is that we aren't a nation of producer savers where we produce all these wonderful products to distribute out there to the world and the world would send us their money. That's not what we produce here. That's not what we're doing. What we produce is a consumer. That's what we produce here in the United States. And if the consumer is tapped out and they can no longer go to their 9-to-5 job and be able to collect a paycheck that is enough to continue into the progress of this economy that is built off of consumerism, if they can no longer participate in that, being that consumer, raising the aggregate demand from their hard work, then the government will literally just have to force feed the money right into us. That's what this is really about. Like, even the thought of it, the communication is not there to support the people. It's there to keep the system moving, to make sure that the powers that be can continue to produce that consumer, which is you. And if you can't take out debt and continue to consume by the issuance of debt because you're debt saturated, they're going to take out the debt on your future's behalf and literally hand you the money and say, here, why don't you go spend it on the future? Spend your future money right now. Because you're not taking out the debt, the government will do it and then force feed you the money. You see what's happening here? See, this is really what's going down. I mean, all this idea that they're going to try and support the economy and stuff like that, that's ridiculous. It's ridiculous to think, right? That's not the way that it goes down. Support is creating an environment that is allowing the people to become producer savers, and then that way they can benefit from their efforts. That's what builds a strong economy. Anything outside of that is delusional thinking that they're trying to support. They're not. They're trying to maintain it. That's what's really going on. And so it's easier for me to see this when I think about it that way, as opposed to, no, we're going to try and take the efficiency, the lack of efficiency out of here, and we're just going to literally just throw it away to a handful of people, handing it out there to people and let them do whatever they want with it. Just say it out loud. Does it make sense? No, of course not, because that's not what's going on. Right? The whole point of it, again, is to raise aggregate demand. How do they do that? How do they create an environment that gets the people out there spending money? I mean, if they can't lower interest rates to stimulate the economy, then they're going to have to literally take out the money themselves and force feed it into the people. And that's what we're saying here. Or the possibility of it, since it's all hypothetical anyway. Don't all the deposits into SVB, the bank caused it to crash? Didn't all the deposits into Silicon Valley Bank? Okay, so what happened with Silicon Valley Bank? And I mean, I'm probably gonna end up oversimplifying this, but we're just gonna explain it really quick. Is that when interest rates were really low, all the assets that they were holding, right, had a low yield to them and a high price tag. So just like anything else out there, when you think about yields coming down and prices going up, think about like U.S. Treasuries, right? U.S. Treasuries are a great way to look at it, and this is what a lot of what these banks were holding were these type of assets. Now, when the yields are low, the price is up. So now they have a value, right? These, like, it's as if I had, like, I don't know, this a gold bar, right? And I say, hey, this gold bar is worth $3,000, right? And I put it on my balance sheet as a $3,000 asset. But then one day the price of gold goes down to $2,000. Well, now my $3,000 asset is only worth $2,000. Well, just like any balance sheet, you have assets and you have liabilities, and generally these two are equaling each other. But if your asset all of a sudden starts losing value, your liabilities are a lot more than your assets are worth, and people start pulling out the deposits, which are your liabilities, right? Our deposit, which is our asset, goes to the bank. That's essentially their liability, right? Is because now they owe us that. Well, if that asset or that liability is now higher than their assets are worth, people start pulling out the deposits. Pretty soon their liabilities start going up even further. They can't sell enough of their assets to cover their liability. And this is where the Bank Term Funding Program came in and said, hey, you know all those assets that are losing value because the yields are rising, the interest rates are going up, and the assets are falling? Because that is happening, what we're going to do is loan you money on those assets at full value. Not the value that you could sell them to today, right? Because that's dropped so much, and you can't do that. You sell it, you go bankrupt. Well, what the Federal Reserve essentially did is they lent those banks money on those assets that have lost value at full value, and gave them like a year and a half or something like that to pay it off. So that's essentially what happened with Silicon Valley Bank, is as the interest rates started to fall, or started to rise, and the price and the asset prices started to fall, the Federal Reserve knew that situation was going to happen. Like they know that if the yields go up, the asset price is going to fall, and that there's going to be banks' balance sheets who are going to find themselves with liabilities far in excess of their assets that they have. Now, this is like the Fed knew that this was going to happen. That's why they deployed the Bank Term Funding Program, which was the ability to loan on those assets at full value. So anyway, moving on. All right. DOGE dividend payment equals dividend payments are earned income. I mean, I don't know. To be honest with you, it's all a hypothetical situation to begin with. And so therefore, I couldn't imagine what it is that it's going to be, or what it could be, or what it should be, or what it's going to do, since it doesn't exist, right? Like everything that we talk about as far as the deployment of a DOGE dividend is strictly what if, right? What if? Hypothetical situation. Now, I'm just personally thinking about what it is that the economy is saying right now that then allows for the government or this particular situation to even come about, right? The fact that they're even talking about stimulus checks, regular dividend checks that could come out, like whether it's a one-time check or continuous off of that. Again, it's a hypothetical situation, but in my mind, what it is that they are trying to do is produce a consumer. They're not trying to support the households and businesses out there. I mean, yeah, in a way they are, but they're trying to do that by producing a consumer. And since the consumer is debt saturated, meaning like, even if you were to lower interest rates, it's not like they can go out there and stimulate the economy by buying houses and cars and go on vacation. It doesn't really work like that anymore. We've kind of moved beyond that, right? Now it's going to take ever increasing amounts of government effort to deploy cash right into our pockets in order for us to go out there and spend that money. And by doing that, anytime you inject new money into the system, what you are going to find is the capitalist and the property owners are going to elevate themselves even further away from everybody else down below, because they're going to end up spending that money on pleasurable experiences or the necessities of their life, but they're not going to be able to deploy that money into return on capital investment type of positions, stocks, bonds, real estate, something of that nature. They won't be able to do it. They're living paycheck to paycheck, and every time they get a stimulus check, if they do not act in a way that says, I'm going to get out of debt, or I'm going to move into capitalist or property ownership, capitalism or property ownership, then they will be separated. They will be moved down the line, while everybody else who does that is going to find themselves ever increasingly higher on that side of the wedge. This is a scary moment. Like, this is the moment that most people are probably going to end up suffering the most. This is like in our economy, and not recognize why it's actually happening, because they are going to have such a better elevated standard of living that they will not recognize that the separation between the rich and the poor, the inequality, is growing as bad as it is. This is weird to think, right? But you think about the conveniences out there. I watch homeless people talking on cell phones, drinking beer. Like, there's some people in this world that really live poor. Like, there is real poverty in this world. But when you see somebody who's homeless, who has an EBT card, who has a cell phone, who's drinking beer, right? That's a high standard of living even for the homeless. This is the type of situation we now have within this nation. You find that it's almost impossible for a working class individual to save enough money to buy a house. Why? It's because the property ownership and the capitalists are separating themselves. The inequality is getting worse. Right? I recognize this every day. Like, here in my hometown of Astoria, Oregon, the real estate here it's ridiculously expensive. But I look at who's moved into our area. We got this huge hospital district growing up. Really good wages, high wages. Working class can't compete against that. And we got remote workers, we got retired individuals. We live in a very clean, friendly, nice, beautiful area, and it's costly. And the people who are at the end of the line, the people who are working those day jobs, even if they're a good day job, you get paid a decent wage, it's not enough. You can't compete against the rest of these people out here. And this is the exact same thing that is going to be happening throughout the rest of the nation, not just here in Astoria, but for everybody who is now competing against people who have access to that new money. And if that new money is coming in and is being deployed into apartments, being pushed into the car market, whatever it is that people are needing for their lives, you're going to find that added new money in there is going to start causing those particular prices to move up. It's added consumption. And it's very much like, they're pushing for us to try and increase the aggregate demand. It's working. The only problem is that every time you increase this aggregate demand, you're pushing that new money in, you are going to separate it. You're going to create the inequality. There's no way that you can do it any other way outside of production and savings. That is it. That is the only thing. When you are a producer saver, you are going to have a strong economy, a good economy, one that is appearance of stable, one of capabilities. Like, the average person could go out there, get a factory job, with that factory job, produce something that they can distribute out there to the world. The world wants that product, and guess what? You will have a decent standard of living because of that. But if you have to go ever increasingly deeper into debt, issue out U.S. Treasuries, sell those U.S. Treasuries to the world, and then literally hand people $5,000 checks so that they'll go out there and buy the production of the world so that they could keep this consumer economy going, this is the path that we're headed to. And it's scary. It's scary to think, because I feel for my kids. I feel for the future, like the future generations that are going to have to deal with the fact that if they are not moving actively into a property ownership or capitalistic position, I don't care how good their skills are, you're not going to be able to compete. And that's what's sad about it. Like, you'll find the positions, you will be able to be a carpenter or whatever it is that you want to do with your life, and you will find how it is that you can perform those skills and make it in this world, but it's not the same as it used to be. Right? There was a time when it was easy. If you were just somewhat disciplined, you didn't drink, you showed up every day for work, you put a percentage of your paycheck to a retirement fund, you saved up and bought that house. Like, all these things were capable. You were capable of doing it. You didn't have to try that hard. You had to be somewhat, dedicated to the outcome, show up every day, right? Be disciplined in that fashion, but you didn't have to have some super smart education degree or something like that. You didn't have to go and find some fancy job or multiple jobs or anything else out there like that. You could just go and find a regular old job and do it. those days are gone, right? And it's best to understand it in that fashion, because there's a lot of people out there who seem to think that there's a way of bringing that sort of economy back to the people. There isn't. There is no way. I've studied this stuff so long. I wish I could come up with a way that says, hey, if we thought in this direction, then it would work. The only problem is that thought in that direction that you would have to take it is meaning that you would have to work twice as hard as you're doing. Do not spend any money on anything that you would enjoy. Take all the money that you have, whatever extra that is, whatever extra means, you pay off debt. If you're not paying off debt, then you are moving it into property ownership or capitalism, one way or the other, buying stocks, bonds, whatever, right? Deploying that money for a return on your capital investment, and do that for literally generations of people. Like, live in a shack, own nothing new, right? Everything old, everything used. In fact, just don't even use anything at all. Like, just deal without, right? And do that for generations. We might be able to come back to a position in which that we can produce and sell things to the world, right? In a way that then could have us living in a decent standard of living. But I don't see that happening. Like, that is so far off. Like, it's easier to understand how DOGE is going to create stimulus checks to benefit the economy than it is to try and figure out how it is that we can get everybody to change their mindset in order to repair the economy and have a production saving nation again. I think it would just be far easier just to deploy $5,000 checks. I mean, it would. All right, guys, how far are we into this thing? We are 11:35. 21 minutes into it. Okay, we'll give it a few minutes. Look at all these comments. Where's that super chat? All right, 569 people watching. Nice. Thank you so much for joining in on today's live stream. We got 96 people who have hit that like button with 571 people here. Let's go hit the like button, everybody. Let's get it up to hundreds and hundreds. Hundreds of people liking. 5,000 on black, please. All right. Let's cruise down here to the bottom. All right. Let's see, this is force-fed 1337, uneducated economist. How is DOGE dividend stimulus when that money was already being spent in the economy by shady consulting corps? It's more like a refund. It's not. Okay, I mean, I guess it is in your opinion of it, but in my mind, when I think about it, whether you get the check and you deploy it into the economy or it's going through some inefficient government program, either way, it's being deployed into the economy. Right? Like, I mean, you know, it's just like, here, we got a bunch of money and we can just hand you $5,000 check and you can go spend it. Or we got this money and we can just hand it to this inefficient government employee and then they can go spend it. Either way, the economy looks at it the same way. Right? Like, we personally get upset with the idea behind it because we're thinking, okay, they weren't efficient with the money. They should be smarter with it. They should be, you know, be more efficient with it or whatever. But at the end of the day, it doesn't really matter. They're not producing anything. We're not trying to distribute anything out there to the world. The only thing we're trying to do is produce a consumer. And whether you give it to an inefficient government employee or you just give it to somebody for no particular reason at all, the outcome is the same. They go and spend it into the economy. Right? Like, that's like, it doesn't make any difference. Right? And in the exchange, we would like to have something in return for it, right? If we give it to a government employee, we would like to have something in return for that. That would be like, you know, hey, that's a good idea, right? But it doesn't really matter because when you look at the economy in the fashion that we are not producer savers, but producing a consumer, it doesn't matter whether you give it to this person or you have an employee try and do something in exchange for it. The outcome is the same. All right. Wait, who said what? 5K to government employee or lower incomes to who? And it doesn't matter. It really doesn't matter. You can make it up and think about it however way you want because all this is hypothetical anyway. It doesn't exist. Nothing has happened. There is no stimulus checks coming. There is no reason to even internalize it. And again, like, even doing this video, like, I don't know what benefit that anybody would really get from it other than trying to understand the flow of money into the economy, and that's it. Like, if you just took it at that fashion and say, okay, we are looking at it and how new money is deployed, whether it's going through governments, whether it's going through stimulus checks, How is it that that money actually impacts the economy, not the individual person? Because we could at any given time take that money and say, hey, I'm going to go blow it on toots and horrors, or I'm going to go and put it into a capitalist investment of, buying stocks and bonds or something of that nature. Either way, that money gets deployed out there, and what ends up happening from that is it will separate the rich from the poor. Whether you spend it out there on good times and parties, right? Because if you do it in that fashion, what will end up happening is it goes into the products that you buy in order to have a good time, or you put it into stocks and bonds and you separate yourself from the poor. So either way, deployment of money, new money, regardless of how it happens, creates the inequality every time. And again, like, we can sit here and talk about all the benefits and hoardness or whatever that's happening out there. Just that simple fact. Deploying of new money is what creates the inequality, and I do not care who you give it to. Give it to the rich, give it to the poor, inequality will grow. All right. All right. Give us gold, not paper fiat. Well, no, and I would disagree with that one as well. Right? Like, if you want to be on the gold standard, go be on the gold standard, man. Go buy as much gold as you can and load up on it. Hey, I don't have a problem with that. In fact, right now, I'd be loading up on silver as opposed to gold, because silver is so much more undervalued than gold. So there's no real reason to even buy into gold when you can load up on silver like you can. The only problem is that if we went to a gold standard or a silver standard or something of that, like a metal standard, even a Bitcoin standard, any kind of limited currency that prevents government from just blowing money and just spending it however they want, if you were to go into a situation like that, we here in the United States do not produce anything where we could have that new money coming into us. We produce a lot of stuff, but we consume a hell of a lot more than we produce. And if we are consuming more than we produce, what we are going to do is buy foreign production, and we're going to export our gold or Bitcoin or silver or whatever fixed currency that we are using, and we are going to be broke. We are going to be in pain and misery and suffering, poverty, hoardness. Now, me personally, I kind of recognize that taking place or would take place. So I would position myself to absolutely benefit in that sort of situation. But most people will be in pain and misery and suffering. Right? Now, again, like, I thought about it. I positioned myself in a way that I might be able to take advantage of a certain situation that would arise like that. But I don't believe it's going to come. Nor do I want it to be there, right? Because I understand how much suffering would actually come from that. But you personally, jump on it. Go get on the gold standard, man. Be your own central bank and have an asset of precious metals, and that's it. And you will be separated from all that stuff, right? In fact, there's no better way to separate yourself from all the government, third-party banking system, whatever you want to look at it, however you want to look at it. There is no better way to separate yourself from that than to get into precious metals. If the moment you get into precious metals, you have separated yourself from those entities. All right, all gold has been rehypothecated. Stand in line, step right up. All right, I have wondered if the dollar is being collapsed deliberately as a way to make the national debt manageable. Like, if you owe trillions, nearly worthless dollars, how much do you really owe? No, that's absolutely, I mean, that's a very common belief. And don't get me wrong, I'm not trying to knock it. That is a very common thing to think. But that is not what's happening. The dollar is not devaluing, guys. Look at it. Look at the dollar index. It's now higher than it was, prior to all the money printing. The dollar index is at like 106 right now. It was at 108 last week or just a few days ago. This is a very strong dollar situation comparatively to a basket of world currencies out there. A lot of times we end up so focused on what's going on here in the United States, we forget to think that there is a demand for dollars outside of the United States that is far bigger than anybody ever realizes. In fact, this is what I feel that the problem that the Federal Reserve is going to face is that at some point, all these dollar-denominated debt that exist outside of the United States doesn't have anything to do with our government, doesn't have anything to do with the corporations here or the banking system or the people, the investors, nothing. This has nothing to do with the United States in any way, shape, or form. But these are nations, these are corporations, these are people outside of the United States who wrote a contract that is due in dollars. that means there is going to be a demand for dollars to pay that contract off. That contract that is due in dollars that was created outside of the United States by entities that don't have anything to do with the United States, those contracts get used like dollars outside of the United States. When that contract when that thing comes due, it's going to demand dollars to pay it off. That's going to increase the demand for dollars. If that contract does not roll over into another contract and it disappears because the debt was paid, then that takes more dollars out of the system. The dollar strengthens even more. In fact, I don't see a situation in which that the dollar doesn't strengthen from going on from here. In fact, I'm trying to figure out how it is that the Federal Reserve is going to be able to create enough dollars to pay off all that dollar-denominated debt that exists outside of the United States without driving the United States government into unsustainable debt path. See, right now, the Federal Reserve loads up on an asset called the U.S. Treasury. The U.S. Treasury is the government's debt. If the Federal Reserve continues to buy those U.S. Treasuries, they are going to send the United States government into an unsustainable debt path. How do they create the liquidity? What asset do they buy in order to print up the money without driving the government into debt? See, this is the major problem that I think a lot of people don't realize, is that there is going to become a liquidity crisis going into the future if those contracts come due and there's not enough dollars out there to pay them. And the Federal Reserve is going to have to figure out a way to print money at a pace that is probably far exceeding anything that we have ever seen before in order to get enough liquidity out there to pay off all those debts. And they don't have an asset to buy without destroying the United States government. You see what's happening here? Like, there is no way that the dollar is going to fail anytime soon, so long as you have all these nations like China, Brazil, India, South Africa, all the Brics nations, besides maybe Russia, are taking out dollar-denominated debt. They are writing contracts that are due in dollars. They're not trying to get out of the dollar. They're trying to acquire dollars. And nobody sees it this way. Everybody says, oh, man, Brics nations, they want out. They don't want to piss on the dollar. That's not it. That's not even the case. Right? All right, well, we got another $2 super chat from Happy Valley Farms. Thank you so much for the $2. Brics trades without the dollars, no? Brics, okay, the Brics do trade without dollars. A little tiny bit of the transactions that occur out there. Like a tiny little bit. It's like, literally, like taking this book, right? Imagining it just full of transactions. The Brics nations, there you go. There's all the transactions that they do, right? Comparatively to all the rest of them that the dollar is doing. That's the difference inside of it. There's not enough of the Brics nations in order to perform all the transactions that need to be done. Even if they wanted to do it, if they said, hey man, we don't want the dollar, we're going to use our own sovereign nation's currency in order to do all these transactions, they don't have enough of it. There's not enough of those currencies out there in order to perform all the transactions. It's like saying, hey, I want to do 100 transactions at $1 a transactions, and I got $98 in U.S. currency, and I got $2 in Brics nations, and as soon as I'm done with those $2 in Brics, I'm out. There's no more transactions I can do with the Brics currency because there's not enough of it out there to do the transactions. That's the problem that most people face. See, it's the reason why the dollar was even able to take over as a world reserve currency to begin with, is because everybody was using gold. Right? Everybody was using gold to do the transactions. And when there wasn't enough gold, they were considering the dollar as good as gold. Now, they knew it wasn't gold. They knew it was dollars. But they knew if they had a fixed amount or a certain amount of dollars, they could get a certain amount of gold. It was fixed, right? Well, at the time, whatever one you want to look at, $20, $35, whatever it was fixed at the time. And so people looked at their dollars and say, yeah, I know it's paper, but it's just about as good as gold, right? I mean, I can exchange them for gold. So in my mind, even though I'm using dollars because they are on a fixed exchange rate to gold, well, now I accept them for transactions. But then what ends up happening is if all the gold gets depleted and they're like, hey, we don't have enough gold to do transactions anymore. It's like, well, I guess you're going to end up suffering in recession and depressions and poverty and misery and all this other stuff because we have a concentration of wealth happening here. And really, ultimately, They don't really care about gold. All they wanted to do was the transaction. They want to trade their goods and services for other goods and services. That's it, right? And gold was facilitating that trade. But if dollars can facilitate the trade, hey, that's just as good. And if there's not enough gold out there to perform all the transactions that the world is demanding to do, then let's give them something to do transactions with. Here's some paper dollars. They're as good as gold, we promised. Come back with 35 of them, we'll give you an ounce of gold. People accepted that. They started printing out more and more dollars. People were cool with it because they were able to do the transactions. Yeah. Right? So the more transactions they did, the more accepting of the dollar they were. And again, back in their mind, they were thinking, well, yeah, this doesn't seem right. I'd rather have gold, but I'd rather do the transactions than anything because I want to eat tonight. So we're going to accept the dollars. The more the dollar was in demand to do the transactions, the less gold there was available to back up all those dollars. Pretty soon it got to a point where people were like, hey, you know what? I think there's too many dollars out there. We're going to start taking our gold back. And the United States is like, yeah, no. We can't. We've gone way too far. See, you wanted to do all those transactions. We provided you with the ability to do all those transactions. And now you want to take back what it is that is valued and not use what is not. Nah, not going to work. We're going to have to cut you off from the gold standard, but you can go ahead and continue to use these dollars, and we promise we won't print too many. And that's really how it all went down. The Brics nations, if they want to take over as a world reserve currency and be doing transactions on a scale that the United States dollar is performing, then what they're going to have to do is they're going to have to destroy the dollar. Right? Because there's nothing else that is going to be able to replace the dollar. So long as the dollar is accepted and being used to write contracts going into the future like they are today, you're not going to be able to put a substitute. You're not going to be able to put a competitor out there. Gresham's law, Triffin's dilemma, if you study these two particular economic forces out there, it would make perfect sense to you why it wouldn't work. Gresham's law says it straight up. It was like you cannot introduce a good currency when a bad one is accepted. Think about it. If you came to me and you were going to buy some lumber off of me and I accepted gold or I accepted dollars, would you really hand me a gold coin? Or are you going to give me the dollars? You're going to give me the dollars. Everybody would. Everybody would put a gold coin in their pocket and hand over the fiat currency. Only a handful of people would say, oh, no, I'd rather keep this money, keep the money in my pocket. I'll give you a gold coin. Right? I mean, there's probably some people out there, but for the most part, nobody's going to really do that, right? They're going to put the gold coin in their pocket and they're going to hand over the cash. That's Gresham's law. That's why Brics nations isn't going to rise with a gold currency, a gold-backed currency, because the moment that they put that gold-backed currency out there, there would be people like me who would hoard it. It would be like, thank you. Yeah, thank you very much. Here's some fiat. I'll take that gold every day, all day, right? Until there's none left to be had. And the only thing that would exist out there is the fiat currency. So there's no way you're going to introduce good currency into a system where the bad currency is so well accepted like the US dollar. And you're not going to introduce a bad currency because who would accept it, right? There's no way. Triffin's dilemma, Gresham's law. Study those two things. You will find that the Brics nations are not going to take over anytime soon. It's just, it's just the way it is. And I mean, we can hypothesize on all kinds of stuff out there on what could happen or what should happen or what ultimately people 2 years ago, 3 years ago said that the dollar was going to be done right now, and it is stronger now than just about any time. And it's weird to think for most people because they thought for sure hyperinflation scenario was going to destroy the world. I didn't believe it. I didn't believe it for a second out there. In fact, it was from my understanding, my theories, and the things that I had put together, that an elevated inflation expectation, an elevated inflation in the actual economy is what saved the Federal Reserve. Right? It wasn't destroying them. It was like absolutely a benefit. It was supporting them. It was like literally everybody who fell into hyperinflation, the dollar is cooked, totally destroyed, nothing is going to come from this except for a bad time, literally was supporting the Federal Reserve and lifting them up. I know that's hard for a lot of people to believe, but that is exactly what was happening. The Federal Reserve had run out of monetary policy. This is what I was talking about at Zuber's conference the other day. Right? They had run out of monetary policy. They were no longer able to stimulate the economy with the adjustment of interest rates. They could not find the inflationary scenario. They desperately needed it bad. Go and read Monetary Policy Strategies for a Low Neutral Interest Rate World, given by John Williams, November of 2018. It was probably one of the most telling speeches you could ever read, talking about how it is that they were going to push inflation extra high, extra long for an extended period of time after failing to produce inflation from an expanding balance sheet of quadrupling times, right? Taking a balance sheet of $850 billion to over $4.5 trillion, failing to produce the inflationary scenario. Everything that we have experienced as far as dollar destruction, price increases, supply chain breakdown, all that other stuff, every bit of that did absolutely wonders for supporting the Federal Reserve and their monetary policy efforts. Totally 100% win for them. And it's still working. Even today, it's still working. Think about it. The Federal Reserve is doing nothing. They're sitting on their hands doing absolutely nothing. It was just like, hey, what work do we do? Don't do anything. Sit there, don't do anything, right? That's what the Federal Reserve is doing. Meanwhile, all the expectations that people have of tariffs and stimmy checks and government shutdowns and all this other stuff is creating such havoc and inflationary pressure within the economy, it's starting to raise the neutral interest rate. The neutral interest rate is the rate that the Federal Reserve is neither accommodating nor restricting the economy. And all this future expectation of stuff that hasn't happened yet. Don't get me wrong, it's a credible threat, so it's credible, right? It can really happen. But the people's behaviors and belief systems that they have taken in and what they are doing now in the economy is raising the neutral interest rate. The Federal Reserve doesn't have to do anything at all. They're sitting there. They're sitting there not doing anything, and people are like, man, what's the Fed going to do? And I'm like, nothing. They're doing nothing. They're just going to let you do all the work for them by having an elevated inflation expectation, which raises the neutral interest rate, which makes the economy less restricted if the Federal Reserve just stands still. And since they're trying to get the neutral, if you have the elevated inflation expectation, neutral will find them. They didn't have to do anything at all. Right? How hard do they have to work or try when they are doing nothing? Literally, they're sitting on their hands. Oh yeah, well, we're going to have to wait and see. So until then, we're just going to sit on our hands and wait and see, right? We got to see what's going to happen from all this stuff. That's what they're doing. Nothing, right? But people's expectations are definitely performing in the economy, right? What time is it? Oh, I got to go. Man, this was so much fun. We got 634 people watching, 203 likes, $4 in super chats because you guys are always so supportive of the Uneducated Economist. Thank you, everybody, for hitting that like button. Thank you for joining in on today's live stream. And I want to throw it out there one more time for everybody. Looking to go to the Rebel Capitalist live event, and I am a little tight on my budget right now, trying to figure out how it is that I'm going to get the flight and hotel and all that other stuff. If there's anybody out there who wants to sponsor the Uneducated Economist trip, including all-nighters as well, right, to support the trip to Florida for the Rebel Capitalist live, we'll promote your business or wear your hat, your jersey, whatever it is that's you got out there. If you want to help out with some of that. With some of that trip, that would be awesome. Just thought I'd throw that out there to, see what might come from it. But even if you don't, come visit us over at the Rebel Capitalist live event. I think that's going to be one of the better, things that people can do as far as getting in with a networking group to try and learn what it is that's going on with the economy and what it is that they can do to try and better themselves in their investments or their, property ownership or whatever it is that they got going on. The conventions, the conferences that we go to are, they're second to none. These things are absolute must if you want to try and get in with a group of people who are successful at what they are doing now. I can't find a better place to go to try and meet these people. So it's well worth it. So I encourage everybody to go check out the Rebel Capitalist. And again, if you want to support the Uneducated Economist, there's a link down in the description to an email address. We can talk about it. There's all kinds of opportunities and options that we can talk about as far as that goes. But thank you everybody for being here. Thank you so much for hitting that like button. And again, I believe this is a great topic as far as just kind of the hypothetical thinking of it, but to understand why it is that they would do it, not necessarily what it's going to do, right? I mean, that's like, as far as when I think about this kind of stuff, you know, why are they doing it? How is it that they have the ability to even do this kind of thing if the economy wasn't in the position that it's in today? Okay, uneducated economist, you guys let me know.